Good morning and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Tuesday, February 4th, 2020. We saw a big rebound in the U.S. market yesterday, which was a nice relief after all the selling we saw on Friday. I don't know that we're totally out of the woods, but futures are looking pretty good. Remember, these are the first couple of days of the calendar month, which typically are very strong days. This is when money inflows come into the market. So I wouldn't be reading too much into it at this point. I think we're in a consolidation phase, but it's really hard to argue with this secular bull market, that is for sure. Let's go ahead and jump into what's going on and what we're going to take a look at today. We do have a couple of things I want to go over. First, of course, we'll go through the daily market recap, talk a little bit about what happened yesterday, get into talking technically. I don't know if you saw my article that I wrote yesterday in Trading Places, but I talked a little bit about an energy rebound. This is a group that's been beaten up really badly, and we're going to talk a little bit about energy. Earnings spotlight, Google reported last night. A number of companies really, the earnings scoreboard really lighting up at this point. Number of companies reporting, so we'll go over a number of those companies, including Google. Upgrades, downgrades, and then I'll end the show today with 3 you must see, which is just a few charts that I find very interesting. I think you will as well, and they may even be trading candidates. We'll take a look at them and you can see what you think. But let's go ahead and get started with this, and I'm going to jump from yesterday, and you can see that the Dow was up 143 points. It was off of its earlier highs, as was the S&P and all of the indices, although the NASDAQ held on to most of its gains yesterday. But the Dow was up 0.5%, S&P up about 0.75%, the NASDAQ up 1.34%, so that was clearly the big winner. Mid-cap stocks up 1.07%, and the small cap up almost 1%, just a little bit under. Leadership yesterday, materials. And I think materials and energy could start to maybe move in unison together to the upside in the near term. And again, I'll talk about that in just a minute. But yesterday, materials up more than 2%. Technology, 1.3%. Communication services, 1.9%. Healthcare, 0.9%. The thing I liked about it is that you don't see among the leaders here in the sectors with this rebound, you don't see utilities, you don't see real estate, you don't see consumer staples. And so for me, that's a good sign that this rebound, it wasn't more rotation out of the aggressive areas. Instead, the aggressive areas led us higher. And as I mentioned on my show yesterday over at Earnings Beats, this reaction here in the XLK just does not seem to me to be the type of reaction that you would see if we were going to see an economic or an earnings slowdown. Technology is the area of the market where the earnings growth is most important. These companies, a lot of these companies are built on the future earnings growth. And so if there was any kind of a problem with that, I think you would see technology getting hit very hard, and that's not happening. So I take I take something away from this, something bullish away from this, the fact that technology during this consolidation period really has not been hit at all to the downside. Energy, as I mentioned, you can see it's been straight down. This has been a horrible month. A lot of things going on. I think when you take a look globally, a lot of fear about the coronavirus and what impact that might have on growth around the world. So that's having some impact. I think just the fact that the dollar has had a rebound in the month of January, that's putting pressure not only on energy, but also is doing the same thing on materials. So those are some things that I think will reverse, and I'm going to talk about that in just a bit. But let's take a look at the 10-year Treasury yield first. Here, and let me make sure we got the latest. The good news for the stock market is that we're getting a big jump in the 10-year Treasury yield today, up almost 7.5 basis points, back to 1.59%. And what I did here is I put the S&P 500 on the bottom here, because normally what you see in a secular bull market, well, let me take a step back. What you normally see in a secular bear market, when you get these big drops in the Treasury yield, that means Treasuries are being bought. So you're getting a lot of money moving into defensive areas. The money comes pouring out of the stock market. But what we're seeing instead of money pouring out of the stock market is when we get into these big declines, we see sideways consolidation. We see a big decline, sideways consolidation. And then when the 10-year treasury yield picks up, that means money's rotating away from treasuries. That money goes right into the stock market. So when you get these big pops, you can see the S&P 500 moving up as well to the upside. So the fact that we've gone through the last 2 weeks with this big drop, that led to our consolidation in the S&P. If we start moving again and we have a little bit of a pop here in the 10-year treasury yield, I would expect perhaps another breakout in the S&P 500. It's going to be very interesting to watch. I think if the yields stay down, then I think we continue to consolidate. But I believe if the yields go up, we're going to see another breakout in the S&P. So we want to keep an eye on that. All right, talking technically, I mentioned about energy. And here was the article that I wrote yesterday in Trading Places. And I wanted to mention a couple things. And I don't know if you had a chance to read the article, but I wanted to go over it. I think it's pretty important. When you look back at the past 6 months, this is what this leaderboard is. It's the last 6 months. So you look at the sectors and you see, okay, there's technology. The percentages are over here. Technology up more than 22%. Utilities, and this was one of the things that we talked about. Utilities really had jumped in the past couple of months. And that was one of the reasons why I was starting to get a little suspect of the market's advance. Utilities, and even though real estate's down here toward the bottom, we actually, 2 weeks ago, if we had pulled up a 1 month leaderboard, you would have saw utilities and real estate leading. And so the market was trying to break out, or actually it was breaking out, but money was rotating to defense. That's normally a warning sign, and it was again this time. But when you look back over the last 6 months, you can see technology, the clear leader, but look at the bottom. Energy, even though the markets, continued to move higher, had a strong fourth quarter, and really we saw global markets rallying. Usually that's a good thing for energy. But you can see energy down 8.6%, clearly the lagging sector. Materials down there with it. And you can see by the scooter scores that on a relative basis, these groups have just been horrible. So what is going to happen here? What's likely to happen? Well, I watch a couple of charts to kind of give me a clue as to what might happen with the dollar. And both energy and materials are quite dependent on what happens to the dollar in terms of their relative performance. So you've got the US dollar, and I'll show you a chart. Here's the dollar down here, and it's been trending higher for the last 8 years. And if you look at a long-term chart and look at the relative strength of the XLE versus the S&P over, say, the last 20 years, the XLE versus the S&P, in other words, the relative strength of energy goes up when the dollar goes down. And the relative strength goes down when the dollar goes up. Now, I believe we are still in a long-term uptrend in the dollar. I'm not ready to call the end of the long-term uptrend, but I do think short-term we've got some issues. And so if the dollar moves lower, even if it's just for the next 3 to 6 months, I think that's an opportunity for energy to rebound for a while. And so that's what I'm looking for. I'm not making a call on energy to hold for the next 10 years. I would be much more bullish on energy when this uptrend breaks on the dollar. But the reason I think that the dollar is going to go down, I follow a relationship between the treasury yields here in the US and the treasury yields in Germany. And I use Germany because I find the correlation, long-term correlation between our two countries is as strong as any other countries, whether we're dealing with the treasury market, whether we're dealing with our stock markets. We tend to move as closely with Germany as any other country. And when you look long-term, I'm talking 10, 20 years, probably the country that we have the least amount of correlation with is China. And I know a lot of us, we hear on the news what's going on over in China, and we really feel like it's impacting us here in the US, and it really doesn't. You might think it should, because obviously China's got a huge economy, but the two, our stock market and China's stock market many times moves inversely to one another, just as often as they move together. So I wouldn't pay as much attention to what's going on in China. I'd pay more attention to what's going on in Germany. So anyhow, this is one of the charts I follow. I like to see what our treasury yields are doing versus Germany's. Now, we know Germany's are negative, ours are positive, but what's the relationship? What if I subtract one from the other? And so when the U.S. Treasury yield is rising faster than Germany or falling slower, that, even if they're both going down, but the U.S. is going down slower than Germany, then this relationship would go higher. And what that would mean to me is that if you've got the U.S. yields dropping slower than Germany's, it tells me that Germany's economy probably is in worse shape than ours. So that's how I view this. It's our economy versus Germany's economy. And what it's been telling me is that things are probably looking up more in Germany than they are here right now. Our yields versus Germany has been going down now for well over a year, probably about 15 months or so. And yet the dollar has stubbornly gone higher. And that hasn't happened a lot. You can see down here, negative correlation happens occasionally. It's hit minus 0.5 3 times in the last 10 years. Doesn't happen very often. You can see up here, we're mostly in positive territory. That was the positive correlation I was speaking of. So right now what we've got is this just beating me over the head that the dollar should be going lower. And finally, we're starting to roll over, and we've been in this channel. Looked like the channel was trying to break at the end of the year, had one more pop, and that was the January run in the dollar that I spoke about. And now it's starting to roll back over again. And I think that is something that could really benefit energy as we go forward. So when you look at energy, when I just pull up the XLE, you can see that over the last 5 years, this 50 to 52 area is pretty important. I mean, we're taking out this low from July or maybe August of last year. But I think that this area right in here, 50, 52, is a pretty good support area. And especially with what it's telling me that the dollar is likely to do. So these are a couple charts that just tell me that it might be worth a shot in energy, or maybe if you're an ETF trader and you've been out of energy, maybe it's time to maybe reallocate a little bit into the energy area. I would not be surprised to see us bounce if we do go a little bit lower, and I don't know that we do, but if we do, I would think this 50 to 52 area would likely hold. And if the dollar does start to really weaken, I could see, a pretty big move in energy like we've seen before. Energy, when it gets going, tends to get going pretty fast. And these rallies don't last, as you can see, but we do tend to have some pretty big rallies. So anyway, I think it's starting to look better. And so that's what I wanted to just point out to everyone. All right, let's move on to, actually, before I move on, hope I didn't catch you there too fast, Zach. I want to take a look at Tesla before we get into the earnings. And I went back quickly and grabbed Tesla's up 100 points again this morning. I mean, it's just been crazy when you look at the chart. But I actually wrote about Tesla back in December in Chart Watchers. And if you're not already a Chart Watcher subscriber, it's free. I don't know why you wouldn't be. There's usually some great information by a lot of great contributors. But back in December, I wrote about Tesla, and I said it was breaking out. 21% of its float was short. Those are guaranteed buyers. When you start getting into a breakout, when you start breaking out like this, and you've got 21% of your float short, you got a lot of people that are sitting there saying, wow, you've got unlimited losses when you're short a position. As it keeps going up, your losses just keep mounting and mounting until you can't take it anymore. And that's what's going on with Tesla right now, is that every day, anybody who's short is waking up and seeing another big move up, another big move up. And when I click on this chart here to get a live update, this is where we were. Look at where we are now. Look at this move yesterday, and now up another 100 today. Now, trust me, we're going to have a big reversal here shortly. But how much can you take if you're on the short side? I don't know. It's been quite a run. So look at the volume down there. You got two things happening here. Number one, it's a short squeeze. But number two, you've got some really solid fundamental information. Tesla reported earnings for the second straight quarter, and their earnings were way above estimates. And again, you start revising earnings higher in an environment where you've got near record low interest rates. Those future earnings are extremely valuable. So Tesla is going up on fundamentals, but it's also going up because you've got this short squeeze. And that's why we're seeing this melt up in the stock to the upside. I mean, I just had a webinar with Earnings Beats members 3 or 4 days ago. Actually, it was on Saturday, and I had another one a week before that. And I mentioned Tesla, and I said, listen, this is a stock that go to 1,000 or more before we get a pullback. When you've got a stock that literally has guaranteed buyers showing up the door almost every day, this is the type of melt up you get. And when you look at this chart, you see many red filled candles. I don't see too many. When we do have gap downs, look at that. It's a hollow. A lot of times they're hollow red candles. Get a gap down and that's it. Buyers right back in. And so this has just been a rather unique story to open up 2020. All right, now let's move on to the earnings. I do want to mention Google first. Google came out last night. Pretty good report. Bottom line, $15.35 versus $12.76. That's the kind of earnings growth that's going to get rewarded. But, and this is what I always talk about with stocks heading into earnings, you can have great numbers and still not go higher. Google is down 3.25% pre-market. You have this Wall Street adage, buy on rumor, sell on news. And it really, as far as, when I look at the market, it's probably never truer than when you look at earnings. Because a lot of times Wall Street meets with management, they go out, they see, things are good, they go back to their offices, they're buying the stock. So they literally are buying on the rumor of how the company is going to report. And so even if you get a blowout report, sometimes you still get the pullbacks initially because you just run out of buyers. Everyone's been buying ahead, anticipating the numbers. The numbers come out. And then, which way the stock goes right after earnings is hard to say. But a company like this, any company, when you're beating earnings and you're beating revenues, I don't care if you're raising guidance or not, because even if you cut guidance or you say things might, a little bit murky going forward, we're not really sure. When you have a history of beating top and bottom line, to me, that's just saying management's being cautious. I mean, we've seen Apple do that a lot. We don't know about next quarter. This quarter we had blowout, obviously, but next quarter we're not quite sure. We could have a slowdown. They take precautions. And that's one thing you can kind of count on going to earnings that Apple is likely to beat. Not all management teams are like that, though. So here with Google, I think this chart looks excellent. It's in the internet space. Internets, you can see we're on fire through the first half of January, then pulled back. They did rally a little bit yesterday. I suspect that they'll, probably consolidate. But watch to see if you get that breakout. If you do, Google just recently set a 52-week relative high to the internet group. And you can see internet very close to 52-week high versus the S&P. So it's a strong group, strong stock, good volume trends. Yes, we might see a little bit of a pullback here. And we are likely to see a pullback, but I wouldn't be surprised to see a red hollow candle, to be honest. Maybe we pull back to that 20-day and then right back to new highs. We'll see. Some other reports that came out. NXPI reported last night, another semiconductor stock. I like this stock going into its earnings. You can see the semis going up. NXPI just recently set a new 52-week high relative to the semis, and semis relative to the S&P. We're at a 52-week high just a week and a half ago as well. So the pullback here, this was a group that really was stretched. And it was one of the groups that got hit the hardest last week on the selling. But I think that this push to the upside is for a reason. And many of these semiconductor stocks are coming out with great earnings. NXPI was no exception. $2.41 earnings versus $2.02. This pullback back to the 50, back to this price support at 125. Stock's up 2.3% last time I saw in pre-market. So we're talking about maybe, what is that? Maybe $3, something like that, maybe on the open to the upside. Let's see if this 125 level holds. If it doesn't, then I think you got your breakout here around 120. I doubt that it goes below 120. I'm not even sure it goes back down there again, but if it does, I would watch 120. Another earnings report. This was one that I was expecting good numbers from, and they beat on their bottom line, 68 cents versus 66. This is Leggett and Platt, and this is in the furnishings area. I'm going to just annotate this because it came down yesterday and came into this gap support. I really thought this one might report good numbers and gap up, but it is down 5% pre-market. Looking back, maybe to this other level right in here, you can see a couple of tops And then you can see this little pullback here before we broke out and then gapped up. So I could go as low on the stock as about 44.75. And if the stock's down 5%, you're talking about somewhere around $2.30, which would be 44.60, 44.70. So we're going to be really close to this area at the open. I'm going to be watching Leggett to see if it has a big hollow candle after a gap down. All right, next up, and I'm just going through some of these that have had some pretty good reactions to the downside. One actually that I did not like heading into earnings did have a really poor report, and that is Beacon Roofing. Beacon Roofing, when you look at it, it's just been going sideways here, even though here in the home improvement area, the group's been going up. Beacon hasn't. If anything, the highs have been getting lower. And you can see that in the relative strength numbers. So again, stock not very strong versus home improvements. And look at what home improvements been doing. I mean, we topped back in the middle of October, and throughout the quarter, this group really was not getting its fair share of money in terms of rotation. It was losing to many other industry groups. So there was a reason for all of that. And when I see a stock that's underperforming a weak group, I normally don't expect much. Beacon reported 32 cents in earnings. They were expecting 43. So again, relative strength can definitely help you in terms of just your expectations on a stock. So this stock's down 1.55%. Not a whole lot, but it already was in a downtrend. Now it's gap. That's going to take it below the 50. Not a stock that I would be interested in. Let's see. One company that I didn't see the numbers, but I saw the reaction, and the reaction was strong. So I'm assuming the numbers were strong. But this is Polo Ralph Lauren, RL. They were up 6.83%, almost 7% pre-market back over the 120 area. I would watch, and I'm going to give you an exact number. If this opens above 122.11, 122.11 or higher, that would be $9. That's going to be about 8%. So it would have to go up a little bit more than what I saw. But if it opens above that number, then I would be very bullish. If it opens below, trades above, and then comes back down below, I'd be careful, because that would be triggering new buyers on the breakout. And if you fail, that could be a short-term top. Again, with this kind of reaction, I'm assuming they had good numbers, but I'm not sure about that. Another one that had some pretty good numbers this morning was LITE. And this was a company that had been trading higher despite being in a really poor group, telecommunications equipment. And you can see on a relative basis, it was one of the strongest stocks in the space. And Light reported $1.53 versus $1.30. So pretty strong numbers there. Stock is up 5% in pre-market. So I like these stocks when you see that they set their 52-week high and then pull back and consolidate for a little bit right before their earnings. I've seen a number of these companies get these big gap ups. And again, I'll just give you a number here to watch. If it were to open above 83.51, and it would need to go up a lot higher than it was pre-market, but if it were to open up above 83.51, that would be a very strong signal in my view. All right, let's go ahead and move on. There were a lot of earnings, but we'll go ahead and move on. I want to get into upgrades and downgrades. The first one that I want to pull up is Comcast, which was upgraded today, CMCSA. I'm looking at the stock, and honestly, it's just kind of going sideways. Broadcasting has been moving up. The entire industry has been moving up, moved to a new 52-week high recently, as did Comcast, and it's pulled back. But when you look at the relative strength, the broadcasting and entertainment group hit highs back in the summer, and we've been drifting lower since. And then when you look at Comcast relative to the group, down near a 52-week low, I would not be upgrading this stock. To me, there's so many other stocks in this area that are better. I personally would avoid it. So I'm not going to agree with that upgrade. Elf Beauty, ELF, also upgraded. This one's trying, I could see an uptrend here with maybe a cup starting to form. We got a nice breakout here, volume starting to pick up a little bit. If we get back through 17, I think that this is a stock that heads back for 20. Now you look at the personal products, and this was a stock that just probably about 2.5 months ago was a leader, 52-week high. But during this period of consolidation, if this is a cup, I think maybe that's what's caused the deterioration, but that also, the relative strength starting to pick up as well. Other upgrades, GDOT, Texas Roadhouse, WW. One downgrade, and this is a stock that I mentioned on my show yesterday, Checkpoint Software. They came out with earnings, they gapped down, they rallied. Remember, when you gap down, market makers are on the other side of the trade, so a lot of times you will get a snapback rally and a gap fill, and that's what we did. Now the stock is being downgraded. It's one of the worst performers in software. I would agree with the downgrade. This is a stock I think that probably going to be under some pressure for a bit. All right, let's move on to the 3 you must see. So I'm going to go first. I want to show you a candle that just looks really enticing to me. And that is, this is a stock that Eros International, also in the broadcasting area, had been moving up. Stock was up to almost $5 2 weeks ago, and it went down to $2.20 and then reversed yesterday on good volume, and that is a piercing candle. That's a reversing candle off this downtrend. Now, it doesn't mean that the stock's going to just go to the moon, but it means short term, I'm looking for a recovery. I'd be shocked if we don't see a high today that's above yesterday's high at a minimum. Now, whether or not we can get back up to these moving averages, that's what I would look for. But EROS off of that reversing candle, that makes me think we could get a rally. And if you look down here off of this downtrend, look at the bottom right there. See that bullish engulfing? Now that one had a little bit of price support as well, so that added even more of a bullish picture. This one I'm not really seeing. I mean, you got a little bit of support over here, but this area, I mean, I'm looking at key support of 150, 120, something like that. We're above that, but that reversing candle is worth noting. Next up is ENR. This is Energizer Holdings. I actually like this stock. It's in the durable household products area, and you can see this move up in relative strength. And then when we got to this high, and look at the volume coming in, this was a good move, gapped up. And I could also, let me annotate this one for you as well. But if you come down here, this was the low. After the gap up, there was an initial period of selling. You gap up, market makers are on the sell side. So a lot of times you will come back down. But buyers really kicked back in around 45.5 or so. So that's going to be a key support level. We know that's where we got some buyers. Also, there was this breakout right in here around 46. And you can see that right at about both of these levels, we put in this double bottom. Now, after the gap up, we set support 45.5. We've got resistance up here around 53. And yesterday, we had a pretty nice reversal on Energizer. I think this stock's going to make another run. I think we're sideways consolidating in an uptrend and eventually going to break out. So until we lose maybe 45.25, let's say, I think this is a stock that goes higher. So I wanted to mention this one. And then the final one that we have is a Netflix. So let me pull that up for you. And really, Netflix, the thing I just want to point out is it is now acting as though it is an uptrending stock. The only thing I would watch is that you do have some gap support at about 362, 363, and we had gapped down from there on very heavy volume. So if we break above there, I think it's off to the races here. I really like the way Netflix is trading. All right, that is it for today. Again, we do have futures up today. Should have another strong day, at least at the open. Everybody have a great day, and we'll see you back here on Thursday. Happy trading.